Ladies and gentlemen, one more from the Pratte home office. It's your business page. And I was doing a little laundry earlier today, and I was thinking about, a story that I had seen earlier. You know, this home was built in 1918, and there was a good chance that the washer that was being used by the family that built this home was probably from a Sears department store. So let me fill you in on an incredible story going through the timeline of that great manufacturing and retail giant, Sears. So 1888, most people were making their clothes and even their own furniture. Sears introduced mass-produced items instead. New labor-saving appliances like washing machines changed the nature of household chores. Its stores helped lead this suburbanation of post-war America, anchoring malls that helped grow a new community grow. It was the nation's largest employer. It was bigger than Walmart and Amazon combined. But as the 20th century came to a close, so did the Sears reign. It fell behind big box companies such as Walmart, which offered lower prices. In 1999, Home Depot, another big box store rival that grew at Sears' expense, took its place in the Dow Jones Industrial Average, the index where the important and powerful companies reside. Now to the 21st century, Americans began shifting to online shopping. Sears fell further and further behind. Instead of changing to meet the new reality, it took a step backwards, merging with another retailer, Kmart, to form Sears Holdings. Its new CEO, hedge fund operator Eddie Lampert, thought he could turn around both companies by simply cutting costs and selling the real estate where underperforming stores were located. Sears and Kmart had 3,500 U.S. stores between them when that deal closed in 2005. When the latest round of store closings is complete, the company will be down to just about 1,000 stores. Now, the mistake, according to experts, that Sears made was failing to invest the savings back into the business. The company that invented shopping more than a century ago missed an opportunity to become a major online player. Macy's, Kohl's, JCPenney's all have struggled with the shifting retail landscape, but they've adapted to the new reality. Better than Sears, each reported strong holiday sales. Meanwhile, sales at Sears and Kmart stores plunged to 16% and 17% in November and December. Macy's has invested into their brands while Sears has not. In fact, it's been selling off brands to generate cash. Kenmore Appliances, Craftsman Tools, Die-Hard Batteries. For years, brands only found at Sears. Kenmore Appliances and Die-Hard Batteries can now be purchased on Amazon. Later this year, you'll be able to buy Craftsman Tools at Lowe's after Sears sold the Craftsman brand to Stanley Black & Decker. Sears purchased Land's End rather than creating it, paying $1.9 billion in cash in 2002. By 2014, Sears had spun off the company to shareholders in a deal that brought just $500 million in cash. Today's Land's End is a standalone company with stock worth a total of $550 million, more than twice the $225 million market value of Sears Holdings. Whirlpool, which started selling its appliances at Sears in 1916, was the most notable example of a vendor departure. The manufacturer stopped selling its Whirlpool, Maytag, KitchenAid, and JennAir products to Sears as of October 2017. Now, Sean Maraji from ARED, a retail consulting company, said all the stores closing brand sales and other efforts aren't likely to produce the promised turnaround. We can all hope for a turnaround for those two iconic brands made in America, Sears and Kmart. But I think, again, the key is if you don't learn from history, you're doomed to repeat it. And it's also important, all of the other brands that I mentioned, they continue to grow as well. Because as they grow, we grow as an economy. Don't forget, for all of the latest business trends and what's happening with the bulls and bears on Wall Street, never ever miss Jim Meredith's morning commentary, son Jamie Meredith, and the Ask the Advisor segment, and all of the interaction with you, the great callers, Heffron Tillotson's Your Money and You, Sundays 9 to 11 on News Radio 1020 KDKA. Have a great day, everybody. Good afternoon.